हेलो एवरीवन, वेलकम बैक टू द चैनल एंड इन टुडेस वीडियो वी आर गोइंग टू डिस्कस अबाउट म्यूचुअल फंड। मैं आपको अपनी पर्सनल म्यूचुअल फंड स्ट्रैटेजी बताऊंगा, मैं कैसे इन्वेस्ट करता हूं और मैं आपको बताऊंगा किन किन पैरामीटर्स को देखते हुए म्यूचुअल फंड को सिलेक्ट करना चाहिए। एंड बाय यूजिंग दिस स्ट्रैटेजी आई एम एबल टू जनरेट close to 20 to 25% of return per annum. So without just wasting any further time, I'll just quickly share my screen. Started. I'll quickly show my SIPs which I am doing. Just click on the mutual fund portfolio, mutual fund portfolio. And if here you can see that these are my open SIPs which I am doing in this account. So I'll quickly just download this statement and then show you. End of the May I have started doing SIPs in this account, and if you have seen my earlier videos you must be aware of that. For the current year I am using Upstocks and First Stock as my broker. Just quickly take you the each and every fund why I have chosen that and what is the reasoning behind that. So for this I have noted down all the mutual fund which I am doing the SIP mode. So total I am doing SIP in 7 mutual funds. So let's just break down. So I have divided my mutual fund SIPs in majorly four part: large cap, mid cap, flexi cap and small cap. In large cap I am investing in two mutual fund, in mid cap also two and flexi cap two, and in the small cap only one fund I am investing. So the next part is the CAGR. If you see the CAGR, I plotted in this column, and the category CAGR I plotted in this column. And note that this CAGR I have calculated since inception. So from starting of this mutual fund, I have calculated this CAGR. So if you see the Canada, it is around 17%, whereas the category is given around to 14%, and the benchmark for this deciding the category, Nifty 100 is a benchmark for large cap funds. So Nifty 100 has given a return of 14%, whereas this funds has given the returns around to 17% and 18%. So why we do invest in large cap? For me, large cap investment should be stable. The risk and volatility should be very low. Since we are investing in large cap fund, my hypothesis or my reasoning behind is that I want return which is greater than category, and also the risk versus category should be below average or it should be low. So for this further understanding, I'll just open this Canada. So for the Canada blue chip fund, if you can see this, it is started from Jan 2013. So we have a record of close to 12 years, and if you see the expense ratio, it is 0.45%. And if you see the CAGR is around 17%, whereas the category is giving 14%. Now I'll tell you why I've selected this. Let us just check the peers. So these are the peers in this category. So let us compare Canada and the Mirai asset, uh, because the risk is less than category and return is above the category and expense ratio is also low. So let us take this Mirai one, and we will also take next to that we can take Axis Blue Chip fund. So we'll just compare these three funds. I'll tell you why I've taken them then. Axis Blue Chip fund, then Mirai Blue. So this green line is related. This green line which we can see it is Axis, blue line is Mirai, and yellow line is Canada. And we can see maximum 5 years. So you can see that Canada is giving maximum return as compared to its peers, and the next best is Mirai asset. Mirai asset is also giving good return. And the third one is Axis. If you can see that Axis was giving consistent return in past years, but gradually in recent years, its performance has decreased and the return as compared to peers and category is below average. So that's the reason it has been excluded. So I am investing currently in two large cap fund. First one is Canada Robeco Blue Chip Fund and second is Mirai Asset Large Cap Fund. The behind is that the CAGR is more than category and the risk versus category is below average or low. Because my logic behind this is that if I invest in large cap, I should want return more than category and my volatility should be less than category. So that's the reason I have chosen Canada and Mirai Asset for this SIP purpose. And the second investment is mid cap. And for me, I am investing in mid cap. My pure goal is to have the better return compared to large cap. And at the same time, I try to manage my risk by taking funds such as they are not volatile. So I'll show you. So in this, I have chosen to Edelweiss and SBI Magnum Mid Cap Fund. So let us open Edelweiss Mid Cap Fund. And always make sure that don't invest in the dividend payout reinvestment, invest in the growth plan always. So if you see this, since inception it has given CAGR of 24% compared to the category of 20%, and the expense ratio is very low, 0.38%. And if you see the peers, here you can see Motilal Oswal, Nippon, Invesco, Kotak, SBI as a peers. So for our analysis, we'll take Edelweiss, Motilal, and SBI Magna Fund. I'll quickly open that. Delete. Delete. So Edelweiss is green, Motilal is blue, and SBI is yellow. And as you can see in the blue, the Motilal Oswal was not performing well, but slowly and gradually it is starting to outperform its peer and also its category. But Motilal Oswal is looking lucrative, but since if you can see in the blue line there is very much volatility and I don't want such volatility in my portfolio. I know the Motilal Oswal has the caliber to generate higher return compared to the funds I have selected, but at the same time the downfall in the Motilal Oswal fund is very much greater than the fund which I am doing the SIP. So for me, first priority is that the volatility in my portfolio should be very minimum and should be very much digestible. For me, the volatility or downfall in my portfolio should be very minimal or it's, for example, if your portfolio size is around 30-35 lakhs and at any point of time market corrects and the fund fall more than category, for example take 2 3 4%, my basic funda is that I won't return more than category, but at the same time, when the market is correcting, my portfolio should not fall more than category, but whereas it should fall less than the category. कि भाई कैपिटल नहीं जाना चाहिए, रिटर्न आज नहीं तो कल कमा ही लेंगे, बट कैपिटल शुड नॉट गो. So that's the reason I have not chosen the Motilal Oswal. And the second, if you can see Edelweiss and SBI Magnum. Edelweiss, if you see green line, it has gradually started increasing and it was performing well in the past years and also it is performing well in the current scenario as well. And the volatility, if you can see, it is very minimal. Downfall is very less. So I've chosen this. And the next fund is SBI Magnum, which I've chosen. So in the SBI Magnum, you can see the return is not at par, but I'll show you why I've chosen this. So I'll just go into the SBI. So SBI Magnum. So I'll tell you why I've chosen SBI Magnum fund. So SBI Magnum from inception, If you see, it was giving around 20% of return. But in the current scenario, the SBI Magnum started outperforming its category and the risk is also average. So I've chosen the SBI Magnum Mid Cap Fund. So if you can see this in the short run, it has outperformed its category by 10%. So potential of going upside for this fund is more. So I've invested this. And for large cap, I want my portfolio should be very stable. So I've chosen risk category low or below average. For mid cap, I want a return more than the blue chip fund or the large cap fund, but at the same time, my risk should also manage. For that, I've chosen the mutual fund in such a way that the risk versus category is average or it is above average, but it is not very high. And the next fund is the flexi cap fund. Flexi cap fund is basically, for example, I'll tell you, in the large cap, the mutual fund manager have only liberty to invest in Nifty 100 stocks, and in the mid cap, the mutual fund manager only have liberty to invest in Nifty mid cap 150. But whereas the flexi cap, he can invest in small cap, large cap, and mid cap. So I will tell you why I've been investing in flexi cap. You must be wondering, I have large cap, mid cap, and small cap. Then why is the need to have flexi cap as additional mutual fund in our portfolio? Because investing in flexi cap, the managers have the option to rotate his fund from mid cap and small cap and route it to large cap. So as and when he finds the opportunity in the small cap or the mid cap, he can change his position accordingly. So I have taken that. So in this flexi cap funda, I have taken a reverse strategy. I have chosen one fund which is having a low risk versus category, and I've chosen one fund which is having high risk compared to its category. And I will also explain you why I've taken this. For the first fund, that is Parak Flexi Cap Fund, here the risk versus category is very low, and I've chosen second Flexi Cap Fund, that is HDFC Flexi Cap Fund. Here I have chosen risk as high compared to its category. In further analysis, I will tell you why I have chosen HDFC Flexi Cap Fund. And if we go in the Parak Flexi Cap Fund, Cap Fund, and if you can see, the risk versus category is low. Since inception, it is 21%. You know, and I have chosen this fund. This is providing return more than category, and also the risk versus category is also low. And in the current last 3 years, if you see, it has outperformed its category, and also the volatility, if you see, the downfall is very much less. In the peers, if you see, there are HDFC Flexicam, Canara, PGIM, Axis, UTI. So in this, if you can see, the return versus category in all other Canara, PGIM, Axis, and UTI is average. So we don't need to further analyze because the return is low. And in the HDFC FlexiCap fund, you can see the return is more than category, but the risk is also high. And if you further analyze this HDFC FlexiCap fund, since inception, it was not outperforming the category. But if you see in the recent year, why I have chosen this? In the recent year, if you see, the category return is very much low compared to this fund. The category is giving 18%, whereas this fund is able to achieve 26%. So I have taken this fund because it is consistently outperforming its category, and I know risk is high. So for managing the risk, adjust your SIP amounts accordingly. And if you see the expense ratio as well, it is not best in the market, but it is good compared to the return it is providing. So this is the reason I have chosen two types of FlexiCap, Parak and HDFC FlexiCap fund, because in HDFC FlexiCap fund, this in the last 3 years, it has started to outperform its benchmark. In the Parak, you can see it is outperforming his benchmark since inception. So I've chosen Parag Parag and HDFC FlexiCap fund for the FlexiCap type. And last one is the small cap. In small cap, so I am taking fund in such a way so I can manage the risk. So if you see the Nippon India small cap fund, I'll just go, and if you see since inception it has grown 40% CAGR basis. So it has given exponential growth. And if you see in the recent 5 years of time, it is giving close to 36% of return. And if you see in the peers, on 3 years basis it is calculating. So, and if you see in the 3 years of time, it has given 25% of CAGR. And if you see in the peers are not able to match the return which is Nippon India is providing, so I've chosen this. And the basic funda of investing in small cap is that we want higher return. Since these funds are not able to generate, keep in mind that in this fund we are getting high return, but the volatility will also be very high, and also there will be a high tracking error. So keep your SIP in such a way that proportion of small cap and mid cap should not be more than 30 to 35% of your total mutual fund portfolio. So in this way you will able to capture the exponential growth. And for me, capital is more important than the return. So I choose fund in such a way that my capital remains intact. So after watching this video, you must have the clear cut understanding how to choose the mutual fund, in which all criteria you can look at, and what all parameters you should look at before investing. So after watching this video, I am sure that you don't have to watch any other video, since now you can do your analysis on your own. Thank you. And in case you find this video helpful, please like, share and subscribe. Thank you.